What's up? What's up? What's up, beautiful people? Welcome back. It's your boy D. This is D's Daily DD. First off, I want to start by saying I'm not a financial advisor. This is not financial advice. So don't take it as that. Take it for educational and entertainment purposes only. Today we got a few things to talk about. We're gonna talk a little bit about AMC. We're gonna talk about why Kim Kardashian is coming up in my Twitter feed and what's going on with her news. And it's not good news for her. But I want to talk about that for a little bit. And then I want to talk about what's going on with, the overall economy and the world and the liquidity issues and stuff that's going on with Credit Suisse. If you haven't heard by now, it's been, a hot topic now for a few days. And you have one side telling you one thing, you have the other side telling you another thing. So we're gonna touch on that, guys. As always, I hope you had an amazing weekend. My subscribers, to the players, traders, and haters out there. All right, guys, welcome back. Okay, so let's get into it. Before we get into that information, I want to talk about this book again. I talked about it in my last video. It's called The Psychology of Money. It's a book that I'm currently reading, and man, I've been hooked on it all weekend. I'm on like chapter 6 right now, but I'm just going to talk about chapter 2 right now because I talked about chapter 1 in my last video. All right. So the title of the second chapter is Luck and Risk. So you always have to remember that nothing is as good or as bad as it seems. All right. And what most people don't realize is that luck and risk are siblings. They are both the reality that every outcome in life is guided by forces other than individual effort. A New York professor named Scott Galloway has a related idea that is so important to remember that when judging success, both of your own and others, nothing is as good or as bad as it seems. Okay. Remember that. So yeah, this book, teaches you a lot about the perspective of money and how people look at it, and not to let yourself think that money is everything, right? And that you have to always appreciate more things than just money too. But it gives you a good guide on successful people. It gives you stories, and it gives you examples of the stock market too, of what has happened in the past and things like that. All right. So I'll continue reading, and I will bring up some points from my readings here in the next couple days too. All right, guys. That's all I really got. If you haven't subscribed, please subscribe to the channel. We're growing the family. We like to stay up on information, and we like to talk about different stocks. But right now, in today's video, I'm also going to talk about AMC and kind of what I see happening right now. So we got to move into it. First off, you have to understand, right? If you're in the market, you have to understand the trends and what tends to happen, because there seems to be cycles, right, that go on in the market. So the first thing I want to point out is going to be this. When do most market crashes happen? So I typed in here and it says key takeaways. The October effect, that's what it's called, refers to the psychological anticipation that financial declines and stock market crashes are more likely to occur during this month than any other month. The bank pandemic of 1907, right? So what's going on right now? We're seeing issues with the banks and liquidity and all that. The stock market crash of 1929 and Black Monday in 1987 all happened during the month of October, and those were really, really bad crashes, right? So keep that in mind, right? Always know your risk, tolerate your own risk. That's why you have to do your own DD, make your own decisions, right? Now we can jump into this. First, let's talk about Credit Suisse and what's been going on there, and what happened over the weekend, all right? But there is this article that I found right now. Credit Suisse in market spotlight despite moves to calm concerns. Credit Suisse was caught in market turbulence ahead of revamp. Shares fell as much as 11.5% before recouping the losses. I think it ended up closing like at 1%, a little over 1% green today. But it did have a dramatic drop, right? Because over the weekend, there was a lot of news that came out. And of course, the bank is saying that its capital and liquidity are strong. But Credit Suisse saw its share slide by as much as 11.5%, and its bonds hit record lows on Monday as concerns grew about the bank's ability to revamp its business and bolster its capital after a string of losses precipitated a strategy reboot. The bank is one of the largest in Europe and Switzerland. Global systemically important banks has been hit with a string of troubles. It has had to raise capital, halt share buybacks, cut its dividend, and revamp management after losing more than $5 billion from the Archegos collapse in March 2021. If Y'all remember they were one of the heavy GameStop shorters and I think some AMC shorts when it also had suspended client funds linked to failed financial greens. So, right. Going down, the bank has been working on restructuring its plan and is scheduled to unveil with third quarter earnings on October 27th. And let's see. While Credit Suisse's recent problems were well known, there had been no major recent developments. Swiss regular FINMA and the Bank of England of London, where the lender had a major hub, were monitoring the situation and working closely. A source familiar with the situation told Reuters. Their market capitalization dropped to a record low of 9.73 billion Swiss, which is 9.785 billion on Monday. Has solid capital and liquidity. Still, bank executives spent the weekend reassuring large clients, right? They had to work all weekend in order to try to fight this, and the news and the media, whatever was coming out, right? That the news that came out. Counterparties and investors about its liquidity and capital, the Financial Times reported on Sunday. So what's interesting here is Credit Suisse spokesman declined on the comment, right? But the weekend calls followed a sharp rise in spreads on the bank's credit default swaps, CDS, which offer protection against a company defaulting on its debt. Again, Credit Suisse CDS soared again on Monday, adding 105 basis points from Friday's close to trade at 335 basis points, their highest level in at least more than 2 decades. The bank's CDS stood at 57 BPS in the start of the year. Wow, 57. Still, broadly, investors were not panicking about wider risk, but to put it in a graph form, the CDS levels, right? We haven't seen these levels on September 30, 249 basis points since, guess what, 2008, right? It cracked 250 right there. And over time, we had not seen these levels. So that is investors, right? Or people panicking, getting into the CDS because the swaps, because they want protection against companies that would default. That's kind of what it is. So I don't think we need to read any of this, but in their defense, right, they are saying they're healthy, they have enough liquidity, and that, you know, there's not much to worry about, because they have total assets of 727 billion, which is 735 billion American at the end of the second quarter, of which 159 billion francs was cash and due from banks, while 101 billion francs was trading assets, it noted. But investors are still questioning how much capital the bank may need to raise to fund the cost of restructuring. Analysts of Jefferies wrote in the note of clients Monday. Also, the bank is not potentially a forced seller of assets. I'm talking about margin calls. That's what it sounds like to me. All right. And analysts in August estimated a capital shortfall of at least 4 billion francs over the past 3 quarters alone. And the bank's financing costs have surged because of interest rates and so on, right? So somebody's lying here, right? Because the executives are saying that everything is good. They're reassuring their large clients, of course, their counterparty investors about the liquidity and capital position. The Financial Times reported. But I don't know if this is true or not, right? This is not a real account, not Credit Suisse right here, Debit Suisse. Our leverage exposure is 900 billion. We currently have 12.37 billion cash on hand, right? So that means they would not be able to cover the 900 billion if that is correct. Let's go back up. There's just been some crazy headlines. All right. So right here too, Bank of England monitors Credit Suisse and market turbulence, Telegraph. This part sticks out to me a lot, so I wanted to, talk about this too. Citigroup plans to dramatically scale back lending to asset managers. Existing books total about 65 billion, but Citi is preparing to drop it to just about 20 billion in the next few months. Remember, AMC went through Citigroup, Citibank. Adam Aaron, right? He gave the shares to them to sell off. They are the can't remember the exact term, but they are the sales agent, right, for the Ape shares. And that's all I'm waiting for. I'm like, what are we waiting for, right? As far as Adam dropping the shares, selling the shares. Maybe that's what's already happening. Maybe he's, well, not him, but Citigroup has already been selling these shares, collecting the money. That's why you see the price of Ape just go down, down, down on top of shorting, right? But I'm waiting for the news of Adam Aron saying, or AMC saying, that the offering is complete. All right, however amount of shares they're going to sell. When the first big short closes, it will start a chain reaction. Every other short will run for the exit. The problem is apes will be there to block that exit. Once FOMO starts, it will be too late. All right, guys. So yeah, those are some of the tweets I want to talk about. Next, we can go ahead and talk about what happened with Kim Kardashian and why she is being charged. All right, so she actually got fined. The Securities and Exchange Commission today announced charges against Kim Kardashian for touting on social media crypto asset security offered and sold by Ethereum Max without disclosing the payment she received for the promotion. Kardashian agreed to settle the charges, pay 1.26 million in penalties, disgorgement, and interest, and cooperate with the commission's ongoing investigation. So she did receive $250,000 to publish a post on her Instagram about Emax tokens. But the problem was, the reason she got charged is because she did not disclose that. She did not tell everybody that she actually had been paid to promote this. So that's why I always tell you guys, right, make your own decisions. I run this channel by myself. I don't have any sponsors or anything. I just come on here, give you my thoughts and my opinions. So always make your own financial decisions, all right? So yeah, that's the fine that she got. She is over worth $1 billion, so I don't really think this, right, is going to really affect her pockets. But it's just it's kind of interesting that they go after her and they don't go after the bad actors within the market, right? That's what a lot of people are pointing out. We can just wrap this up with the chart. It's on its last, support here for AMC, and what I'm looking at is the breakout of this triangle. All right, it's already been in a downfall for a long time, and volume had been drying up. The RSI is super low, and just you see how low. Usually it reverts, right? Once you come to a bottom on the RSI, you can expect to start making moves to the upside, right? Right here, it kind of dramatically went down, but it recovered, went back up. We're right here, all right? So that's why I am expecting, there's multiple reasons why I'm expecting upside. Because if shorts are forced to close out this month, right, there's a lot of bigger things going on than just with AMC. And we're in the macro downtrend here, right? It's right on top of it as far as my graphing and my technical analysis. Another person, right, who has this drawn out too, and it's Rico, and that's like Rico's trades. It's not like I talk to him, right, or anything, but we usually end up having almost the same TA and the same thoughts. So again, I want to see a volume pump, because that's what normally comes after, right? You see how this volume has dried up for a long time. Usually once that happens, then you see volume come in and pump the stock up. Okay. So that's what I'm expecting, just a breakout. And then back to the RSI. All right. This is with Ape. We're going to go look at Ape real quick. This is incredible. I have never seen an RSI this low. It's at 15, right? And after 30, it's already saying you're in oversold territory. And they were able to short it and bring it down lower. And this is just the absolute lowest RSI I have ever seen. So to me, in my opinion, guys, I would think this is a bottom, right? We should start to see the ape price at least stabilize, right? At least start to consolidate, if not make a huge reversal if any covering happens, right? Or FTDs are delivered, which the 43 million, where are they? I mean, I've been wondering that for a while now, right? The date was when they were due was last Wednesday, and we didn't see any crazy price action. I know that. As far as like to the upside or any sign of them covering. So a lot of calls, guys. Be careful with the options, right? There's always there's been, a lot of options, a lot of calls that are landing out of the money. We still got 15,000 puts in the money, and with only 1,720. I always try to look at the positive side of things. I'm not really caring too much right now about the stock price. I'm not looking to sell right now, so it doesn't matter. And in the book, again, The Psychology of Money, it explains to you how over time the market goes up. There is turbulence, right? There's recessions, there's, negative price action over time, but it tends to go up. So 19.1%. And again, they had run out of shares at one point. like always, right? 10,000 to 10,000 to zero, and then they end up finding some. So right now there's, according to this, 350,000 left. So that's the news I got today for you guys. That's the update. You know, thanks for coming by the channel as always. I hope to catch you in the next video, guys. I'm always keeping an eye on things. I always want to bring you the most crucial, important information. And, you know, I hope you guys do well with your trades. Hope this channel brings you education and you can learn about how you can kind of play the market on the upside, the downside, and all that with education, right? But the key is always education and knowing what you're doing. So till next time, guys, have a great rest of your day. Later.